Welcome back. You're watching Business Morning on Channels Television. On the program today, we're continuing our review of the economy in 2014, and our focus is on the nation's business environment in 2014. Of course, projections for 2015. I'm being joined on the program by the Director of Research and Advocacy of the Lagos Chamber of Commerce and Industry, Mr. Vincent Nwani. Mr. Nwani, good morning, and thank you so much for coming on the program.
Good morning, and thanks for having me.
So let's begin with a general overview of the economy in 2014. What's LCCI's perspective with regards to how businesses fared in 2014?
Well, it's a mixed perspective. That is good and bad. Of course, around April last year, Nigeria emerged as the largest economy in Africa, and that's a good news, because what that did is that it rightly positioned Nigeria as a key investment target or destination across the world. We saw FDI flowed into key sector. Half year last year, the FDI into the Nigerian economy was very close to 10 billion US dollars, and that is unprecedented. So it helps to position the country in terms of perception, in terms of capacity, and also key into our population and our rightful place in Africa. But that said, of course, that euphoria or that positive was a little bit short-lived, not fully maximized because of some other constraints and that's downside in the economy.
But just before we get to those downsides that constrain the economy, let's talk about those sectors that benefited from the FDI post-rebasing of the nation's GDP.
For example, the hospitality tourism sector benefited immensely. We see a lot of inflows coming. The guest houses, the hotels were springing up until the Ebola issue emerged, and we saw some slowdown. It's a key sector that benefited. Some other sectors, such as the service sector, also benefited. Oil sector was supposed to benefit, but of course the uncertainty that surrounded the PIB and all of those really constrained investment in that sector. So, but from our quarterly business environment scan and survey, we found out that oil sector benefited. Even financial sector, to a large extent, also benefited, and followed by building and construction.
What about agriculture, manufacturing, those sectors of the economy that actually grow the economy, where we have a lot of small and medium enterprises? How did those ones fare also?
The reports from those two sectors you just mentioned is a little bit worrisome. One is that we didn't really see so much appetite from foreign investors. Of course, you find out that it's a patient investment at some point, and because there are a lot of local or domestic constraints. Also, you have the land issue, you have other challenges. So, to some extent, foreign investors left that space largely for the locals, and a space where the locals are operating. You find out that issues such as credit, access to credit and cost of credit really constrained issues. Regulatory policy, uncertainty, and harsh regulatory environment also was a key factor that really inhibited that sector, that is agri sector and manufacturing sector, especially the SMEs.
So, based on that now, would you say that the investment climate was a friendly one, or was not as friendly as a lot of investors would have expected, especially looking at the fact that inflation rate last year was really very friendly? We stayed within single digits. At least the Central Bank of Nigeria ensured that all the variables and the rest of it did not see them going beyond the single digits framework, and the GDP growth was between 6% and 7%. So would you say that, yes, investment climate was actually a friendly one, or it wasn't?
Yeah, so macroeconomic variables were very friendly and accommodating, but then we're talking about doing business. If inflation is a single digit and within target, that's positive both for consumers and investors. GDP growth, but this is just ordinary number and what actually grew the GDP. What we're trying to say is that the positives, especially macroeconomic positives, was good, but was not able to completely turn everything to positive for investors and businesses. And this is because of the enabling doing business challenges. You'll find out the reports, independent reports done internationally by one World Bank ease of doing business. Of course, Nigeria didn't fare very well. You know, the easiness of getting business dispute resolved is still very, very sticky, very, very difficult. Registering new businesses, getting land permit, and some of these things, even cross-border trading is still challenge. You find out issues such as port issues. During last year, port charges increased by 100% just because of the implementation of the pre-assessment policy of the customs alone. These are key issues that directly impact on businesses. Even regulators, again, did not completely do a very good job to complement the positive we saw in the stable interest, stable exchange rate and low inflation last year. Because for a better part of last year, exchange rate was within a accommodative threshold until the last quarter. So those positives notwithstanding, some other downside and constraint did not really make businesses across the sector to harness the positives.
But with these constraints, why did organized labor, that's
private sector,
organized private sector now, did they make any attempts, to have roundtable, to have meetings with regulators, policy makers, to ensure that the environment favors all parties concerned? Because if organized private sector is happy, it translates to more money and more job creation, more jobs being created for the economy.
Of course, that's our job. As LCCI being one of the biggest, private sector group in the country, that is our job, advocacy, talking to regulators, making sure that the business environment is enabling as much as we can. So the authorities, central bank, of course, we've been engaging central banks for God knows when, and we find out at some point that they are more interested in a good job, more interested in macroeconomic stability, pursuing good price targets, exchange rate targets, inflation targets, and all those. And, this is economics. Sometimes you are pursuing A and but B is also affected, At some point, we find out that the monetary authority, for example, was just interested in making sure that they execute the mandate of macroeconomic stability and sacrificing job and productivity and growth. So those are the balance, but we'll keep on engaging them. We're still engaging them. We will keep on engaging. It's our job, not just CBN, the customs. We had a forum on customs and all the port players at some point last year. We had engagement with transportation, because logistics is also another challenge. The police, the VIO, the LASMA, all the agencies, the Federal Road Safety Commission that makes it very difficult for goods to move from point A to point B within Lagos and outside Lagos. We engage them. It's our job. Every month, every quarter, we do this.
Now, looking at some of those monetary policy actions that the central bank actually took last year, before we saw the major one in the last quarter of last year. For instance, from the beginning of the year, there was an increase in cash reserve requirement on public sector deposits. Coming into the second half, we saw an increase also in cash reserve requirement on private sector deposits. How did all of that affect the way businesses fared?
Of course, like I said before, what it did was to shut the private sector out of banking hall, especially the SMEs. They are not able to access credit. We saw credit interest rate move from between 25% and 30%. Which good business and credible business will survive at this high level of interest rate?
But then the central bank beyond available funds.
Exactly. I'll get
to
that. Beyond the high interest rate, even when you are compelled to take this money at that high rate, the period of processing and some of these documents and collateral that is requested by the banks, they are not available, or they are not affordable by the SMEs. Of course, we're happy that Central Bank, Bank of Industry, of course, unleashed some of these specific sector intervention funds. But you find out that the process of accessing this fund is difficult. For example, the BOI. The BOI policy is that they don't fund working capital. They can fund maybe machinery. They can fund things like input or seedlings. The situation, most of these SMEs already have machinery. They've set up. What they just need is the liquid to combine the labor, to combine and make sure that these factors of production available to them works. They don't give loan. They don't make this credit available to them. And during the year, last year, we also escalated this issue to the BOI and other authorities. So the sector intervention fund that is made to ameliorate the high interest rates did not really trickle down. It didn't work. And that is why we are where we are today.
So since it didn't trickle down, how quickly was this made known to the regulatory bodies involved, for instance, the BOI and the CBN, because these were the ones that actually made the funds, available? How quickly were your dissatisfaction, made known to them?
Second quarter last year, when we went to the field and gathered all of this information, we quickly called the BOI attention. Of course, the BOI is also a part of the chamber. They have a seat in the council of the chamber. So through phone call and email, we can escalate. But sometimes you see that BOI is not the one that even made the rule. It's just a platform for getting these credits out. The central bank makes the rule on the regulates how this money and the rules to take this money, get this money to the private sector. So we carry them along. Beyond that, they also come around to during our forums and sector programs, to encourage and educate SMEs on how to access this credit. But then, like I said, one of the rules is that BOI doesn't lend for working capital, and BOI alone cannot change that. So you see, it's a long chain of engagement process, and it takes time.
Yeah, but Mr. Nwani, from what you've said, it seems as if there was a cordial relationship between private organized sector and the regulatory body. So that cordial relationship should have been, built on to see how everybody can, come to the table and deliberate on this policy so that everybody is comfortable. It's a win-win situation. I always say, there has to be a win-win situation. It can't be a win or lose situation, because nobody's in business to lose money or to fail. And as much as possible, we'd like to see more jobs created. We'd like to see those very critical sectors of the economy begin to work faster than they're working at the moment.
When the new central bank governor came on board, in fact, the inaugural speech is aspiration. We celebrated those aspirations. Now we want to focus on growth, focus on job creation and all of that. And we said, okay, great. Let's see how it works. The first MPC sat. The macroeconomic, the monetary indicators were all remain where they were before he came. The second one, of course, everything was jacked up. For example, the MPR moving from 12% to 13%, 100 basis points. Of course, we know that is a response to the dwindling oil price and the effects from crude oil revenue. But you find out that, of course, sometimes when you sit where they are, you see things on a bigger picture. But what the Lagos Chamber of Commerce is doing, and will keep on doing that, is to make sure that they are informed. They get this real-time information about how businesses are affected or impacted by some of these policies. We'll keep on doing that, and that is what we'll be doing.
At least that was what happened in 2014. Exactly. We're going to talk more about what we're expecting to see from LCCI working in close conjunction with the regulatory body in 2015. So just let's take a quick break and catch our breath. You're watching Business Morning on Channels Television. On the program today, we're still reviewing the economy in 2014, and our focus is on the nation's business environment. I've been having a conversation with the Director of Research and Advocacy of the Lagos Chamber of Commerce and Industry, Mr. Vincent Nwani. Mr. Nwani will still be here with me in the studio when I return in just a moment. Please join me again.